when things are so bad out there. And things must be bad because a record 69% of the public holds a negative view of the U.S. economy, according to the latest CNBC All-America Economic Survey. So it's no wonder that same survey says that just 24% of respondents believe now is a good time to invest in stocks. Dude, that's the lowest reading in the survey's 17-year history? People simply don't feel good about the economy. But you know what? It doesn't seem to be impacting the averages, does it? The S&P's up more than 8% for the year, and today was just another day where the bears tried to push things down, but failed. Dow dipping 11 points. S&P inching up 0.09%, and the Nasdaq declining 0.04%, 0.09, 0.4, nothing. And you know what? People should not confuse their negative views in the economy with a negative view on making money in the stock market. Since when does your economic outlook have anything to do with making money in the market? We know from years of experience here, it doesn't matter where we are in the business cycle as long as you can pick the right stocks at the right prices. And the market, I must tell you, gives those prices to you all the time. Not because it is a store with great prices, but because there's a confusing amalgam of truths, half-truths, false optimism, mistakes, and those all often wind up producing fabulous opportunities for you at home. So tonight I want to parse the whole shooting match. People love to quote, for instance, Warren Buffett, especially when he says, over the short term, the market's a voting machine, over the long term, it's a weighing machine. Or to be more blunt, over the short term, the market's stupid as cardboard. Over the long term, it can be pretty smart. But in my opinion, you can be smarter. And that's the point of what I want to talk about tonight. Yes, I understand the 76% of you who think it's a terrible time to invest. You're worried about the fight over the debt ceiling or the upcoming presidential election or the bitterly divided country or the fact the Federal Reserve is relentlessly raising interest rates to crush inflation. Reasonable concerns. But keep in mind, it's not you who determines the stock price. In fact, individual investors stopped being a major factor ages ago. They bet on the wrong kinds of stocks and gave up on the asset classes en masse. This time it was bogus SPACs or miserably placed or IPOs. We've seen it all happen so many times. So it's not the home gamers who set prices, it's the professionals. And the professionals make stupid mistakes every day. Their mistakes are what I want you to think of as your opportunities. Let me give you an example because it happens constantly. As a matter of fact, I'll give you 3 of them. Let's start with a company you know I'm obsessed with, NVIDIA. A year and a half ago, I made another pilgrimage to their headquarters in California to meet Jensen Huang, the Renaissance man CEO of NVIDIA. Now, understand I have a tremendous level of reverence for this man. Everything we've seen, everything I've taught, everything I know about NVIDIA shows me that Mr. Huang is more thoughtful, special, and filled with wonderment than any other person I've met in business, save perhaps, say, Apple and Steve Jobs, and I never got to meet Mr. Jobs. Lately, we've heard a lot about this stupid term, artificial intelligence. But we tend not to have any idea what it really means. We just like to bandy it about. Jensen explained it to me in plain English. He told me if you put enough powerful, high-speed semiconductors together, they can do incredible things. I said, like what? He said, all right, anything. I said, well, like if you want to draw a picture of something in the style of your favorite artist. I said, you mean if I wanted to, say, for instance, see how Cézanne, who painted still lifes, were instead to paint a seascape, you could actually show me what it would look like? Seconds later, it's in front of me. Seascape that had been done by Cézanne. I mean, he also showed me an artificially made me, AI Cramer. It looked better than me, actually, frankly. It sounded just like me, though, because that stupid voice of mine. I told him, these are wonders. He said it was all available to anyone who wanted to use it. Anyone. I said, who wants to use it? He goes, I don't know. But at first, no one believed. No one believed Jensen. And then ChatGPT occurred. Now everyone believes Jensen. They all went in. They all went into AI, and they know NVIDIA stock's been the same because their chips are what powers AI. Today, an analyst at HSBC, a brokerage firm of some renown, upgraded the stock from a sell to a buy. That's right. He initiated coverage on NVIDIA with a sell rating on December 14th, when the stock was at 176. It's now at 276. I'm calling that bad timing. This was right around the time that ChatGPT started getting popular. Suddenly, clients figured out what to do with NVIDIA's H100. That's the $20,000 chip that you need boatloads of if you want to do this AI stuff. It's the chip that we don't want the Chinese and have stopped the Chinese from getting. Now, in this analyst's defense, and it's tough, but I'm going to do it anyway, NVIDIA's then core business of data center chips was slowing. And he was also worried about the usage of graphics cards for cryptocurrency mining. Headwinds galore. But he completely missed the story, didn't he? Since then, the stock's rallied $100. Sure, you could argue that NVIDIA's nearing its highs because the last bear has finally thrown in the towel. I heard that a lot today. I'm not here to debate that. I'm just pointing out that while it's discouraging to see even the professionals get it wrong, their mistaken negativity gave you an incredible buying opportunity in NVIDIA that lasted for months. That has nothing to do with the economy. Second example, Charles Schwab. In the last month, we've heard more negatives about Schwab than at any other time I can recall. We've heard about how their bond portfolio would wreck them, how their clients were fleeing like rats off a sinking ship, how they were caught with a mismatch of skittish depositors and unrecognized losses of their bond portfolio. I told you it was all nonsense. Nobody seemed to listen. I know I get laughed at. YouTube show it to me, Twitter. Then Schwab reported yesterday, and we learned that, indeed, most of those negatives were flat out untrue. In many cases, they were lies. Lies promoted by competitors, short sellers, lazy journalists. If you don't believe me, go read that conference call where CEO Walter Bettinger teased off on everyone who libeled his company, libeled with impunity, I should say, because nobody's ever going to investigate what happened here. Like NVIDIA, though, I'm not here to say how much I love Schwab. I'm here just to show you how, once again, this may be the worst time to invest, but when a good company can see its stock fall more than 30% when there was nothing really wrong, worst time to invest, but invest. Finally, let's talk about today's travesty, because there's one a day. I could do one a day. I could just call it the Cramer travesty show. That would probably be misinterpreted, of course, but that happens often to me. Johnson & Johnson. My investing club partner, Jeff Marks, and I spent hours, literally hours, examining why J&J could go up pre-market on an amazing quarter and then spend the rest of the day dropping, ultimately falling 6 points from where it was before the market opened. Why did it drop? All right, we fought one negative rumor after another about this great company. There were lots of lies that were put out today, lots of wrong stories. No one's ever going to have to apologize for what they did to you if you own J&J today. But lie after lie after lie, then throw in some slander and then a few more lies. That's what happened. Until the end, like Schwab, it didn't matter. I couldn't fight them all. It was just there were too many boxers. Just me out there in the left-hand corner. Just getting my... Well, anyway, the real issue here is that there was a bogus raid on J&J, and it worked. And in the short term, the market was an idiot. The market's an idiot short term all the time. Again, am I telling you, buy J&J? Not the point of the story. We own it for the trust. We buy it a ton more in a second, but now we're frozen. I think it's terrific. The whole point is that the pros get it wrong constantly, or they're actually trying to get it wrong, or they lie, or they misdirect, or they're naive, or they're short-sighted, or they're short, or they're trying to influence. All these things make it very difficult to invest, and they all happen. That's why you come to this show, because I tell you the truth about what happens. And the averages don't show it, but that's the truth. Bottom line, I don't blame you for freaking out and cashing out. But I do blame the professionals for destroying your confidence with their foolishness. Rather than being discouraged when they screw up, you should take advantage of their mistakes to buy high-quality stocks that they've run from because they're scared or don't know how to do the work.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.